What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. Today's date is May 27th, 2021. We got a lot to talk about today, but the video is going to be shorter than usual. I'm trying to keep them more compressed, keep more of a flow, keep a talk track going smoothly. Before we hop into today's episode, I want to start off with this little picture right here. As we're going into a 3-day weekend, like I've been telling the patrons in my Patreon group, going into this 3-day weekend, if you want to have a good weekend, make sure you position yourself to have a good weekend. And this right here is just a good representation that bad behaviors, they compile significantly faster than good behaviors. As you can see here, if you lose 60%, it takes 150% to gain that back, just to make up for that loss. So when it comes to leverage or taking big position sizing, make sure that what you do is focus on risk first entering any trade. You want to focus on risk, you want to focus on position sizing, because one little tiny mistake can wipe out a complete year of gains or an entire portfolio. As I stated, bad behaviors will compound significantly faster than a bunch of good behaviors over time. So if you want to have a good weekend, just make sure that you start off Friday thinking about that. Let's hop into today's episode. All right, everybody, welcome back to this show. Small caps took the lead today. This is such a weird market. All right. Hear me out here. It seems almost as if the market is just taking its little time, trending sideways, but then we're starting to see these big squeezes take place. Why are we seeing these big squeezes take place? It's almost like these heavily shorted stocks, the big guys are unwinding their positions right now. I don't know what that means. We have to just continue to watch the price action. Industrials, financials, materials led the way. I know we had a lot of performing stocks within that in the Patreon group, so if you're part of that, congratulations. If you took some of those trades, it was a really good day today overall, as the markets were pretty much flatlined. We're going to go into kind of a few things here that I find interesting. First off, things that are on my mind. TNX up slightly today. That probably didn't help out the technology sector all too much, seeing that they don't have this perfect correlation, but when there is strength in the 10-year yield, you could typically see technology stocks struggle. And what you do see that takes off pretty well is banking stocks, and we'll get into that chart here soon, because banking was also a very weird price action that took place today. Another chart that's on my mind that I've been showing is this US dollar in this falling wedge. So I'm still kind of just patiently waiting to see if we're going to break down through this or if it is going to break out. As you can see, this is walking the exact track that we talked about a few days ago, where we started potential moving up, and then heading into June, we might see a breakout where it brings us a little bit lower into June and then potentially sets up for a summer rally. And if that does break out, I mean, gold is moving into its 26th day, which is part of Tom McClellan's research, where he said every 26th day, especially when it lines up with that was weird, a full moon. Surprisingly, it's not going to line up to a full moon this time, but it will line up apparently to a lunar eclipse, which he doesn't know what that means, but typically it means a strong turning point every 26th day, and we're moving into that after a big run up. So if that starts seeing weakness, perhaps that is foreshadowing that we might be seeing dollar strength, and dollar strength could put pressure on equity markets. As far as the lumber to gold ratio, well, let's look at what lumber's doing. Lumber's quietly falling back down as soon as it had this dead cat bounce here, but it's still in very bullish context. As you can see, the lumber to gold ratio has ticked down, but it's still well above zero. When it's above zero, that means it's a risk-on environment, so everything's good right now. But also to note, we're still watching this relative rotation graph. Utilities and XLP are still improving, moving themselves over. So we'll see if they want to take a quick turn down or if they want to continue moving into this leading category. I did notice more professional investors and traders start talking about this as well, which I found interesting. Maybe they watch this show. Maybe they don't. Maybe they found it for themselves. You don't need to be a genius to find this kind of stuff. Then the VIX, we're going into Friday, right? VIX crush Friday. Is it going to crush? I don't know. Well, we have this gap right below us, and judging by the after hours right now, It's looking pretty good so far in the futures markets. We'll see if that continues. If this continues to press up higher, I would be looking to sell into that strength. So I'm in a couple of positions right now. If we get a big gap up, as the VIX would probably come back down to fill this gap, I'd be looking to take some of those profits off the table until I have some more direction. Let's look at the Russell, because the Russell performed very well today. Russell, we redrew this out to be a symmetrical pattern. It is still technically an advanced head and shoulders as well. RSI's cleared right back up through 50, as we talked about. Price percent oscillators looking bullish too. Still, I mean, yeah, it was a good day, gap up and just hanging out there, but it's still within this relative range of this chop. So there's still overhead resistance. We still have underneath the support. It's still sideways at this particular point in time, but it is a good look so far for the small caps. And you can see here on the 15-minute time frame, the only thing that I can really find here is we have some support. I should have made that green right at around the 223 with this gap too as well. We have a slight divergence. As you can see, it's just been this, I mean, look at this vertical movement. The market is so weird right now. Gap up, ramp up, and that's pretty much the day for the IWM. Had a negative divergence. It might be a rising wedge. So potentially, if we do get a gap up, it's going to bring us back into the even more of a negative divergence, and then we perhaps sell off a little bit. But as it stands right now, there is no clear trade that I see. And you look at the BKX for financials. I was talking about how weird this price action is. Gap up, and there's just big U-shaped recovery right here. If it gets up, if it breaks out of this, it's going to probably do so also on a negative divergence. So pay attention to that, where it might be a little fake out, where it sucks people in, a little bull trap, and then heads back lower. As it stands right now, any trade that I'm taking has been a long setup, just because this market, it's so I don't want to focus too heavily on shorting all of this strength. So, you know, the risk to reward just doesn't make sense on certain stock setups that I see personally at this particular point in time. However, there probably will come a time where there's some really good opportunities to start hedging short too as well. S&P 500, also not much. The only thing I want to call out is just a big spike here in volume. Looking back, I looked at the SPY, and the SPY actually had declining volume. This could be... There was a lot of trading volume today. Like a big percentage of the trading volume was in AMC, as you probably are aware. All these squeeze stocks, these meme stocks, just getting squeezed through the roof, probably going to suck in more buyers, which actually that's exactly what it's doing. As it squeezes higher and higher, it gets more attention. As there gets more attention, more ill-informed retail investors walk in thinking that, hey, if it's up 30% today, maybe it'll go up 200% more in the next week. That's typically the thought process. It might sound dumb, but that is really what happens. A little bit of a shooting star candle, but overall bullish context. We're above an inclining 5-period EMA, and then also above the 20, above the 50, above the 100, above the 200. What I want to call out here on the 15-minute chart of the SPY, where we're just really in this sideways chop range, we have this resistance zone above us, which is around 421.50 and up, and then we have below us, we have 417.50 as support. So if we get a crack either way, pay attention to that. If we could crack above here tomorrow, a big gap up, I think that's going to be more of a selling opportunity and taking profits, as I stated, looking at the VIX chart. Let's quickly look at the NASDAQ. Really just floating sideways here too as well. If you're not on the Discord group and Patreon, we talked kind of just about this briefly in the announcement section here. We just said, I just really don't expect too much these next couple of days. And really going into tomorrow, I don't expect too much tomorrow, but there's a thing with that. There's a caveat. When you don't expect anything, then typically something happens. But I'm going to go ahead and say I don't expect much to take place heading into a 3-day weekend. I feel like the volume's relatively going to be small. I don't think that there's going to be huge, big moves taking place by these hedge funds. I could be completely wrong. It's a narrative. I follow price, but that's just what I feel. The Qs on the 15-minute time frame, let's look. 335 to just below that is an area of resistance right here, and then we have 332 as a level of support. Really hasn't gone anywhere for a couple of days, as you can see. And then the semiconductors held up pretty well today as it was breaking out of this little symmetrical pattern and just really floating sideways. Nothing really to report here. We have overhead resistance at 248 to 249. I would like to see these things take a little bit of a breather. There's some really good setups, but I don't like chasing, a run from 224 to 250, basically 248 in this vertical fashion. It's just not my trading style. So I'll be continuing to watch that. I could potentially draw this out now a little bit differently, where I can connect this straight up through that, and then potentially have it connect these two, where it'd be a little bit of a wedge, but I didn't. So it is what it is. Dow Jones, also big spike in volume here. This, like I said, could be due to some of these short squeezes that we've been seeing. Not too much price action overall, up 141 points. The after hours looks pretty strong so far, and it's overall in bullish context. So when I say I'm only really taking long positions right now and looking for really quality setups and being very tactical in that environment, it's because every indice is just like super strength right now. So it is what it is. You have to follow price action. The DIA on the 15-minute time frame, you can see we gapped up, try to go in to close that gap, didn't quite reach it, got very overbought, and then we headed lower, still holding 344.50 as an area of support. And that can go as a zone a little bit lower down to this gap fill, which is at 343.50. And then we have that overhead resistance right at 347. So it's still within a pretty tight range overall, but breaking out of this little 344.50 and staying above there, that's a decent sign. I don't have a BP chart in front of me for the DIA or for the industrials, but that is also overbought on that chart. The transports here look like they got to get above 15,775. You can see here we gapped up, ramped up, and then we camped. Just chilled out there for the remainder of the day, and then in the last 15 minutes into the close, we did sell off a little bit of distribution that took place. So we got to recapture that level to, I would imagine just be a little bit more bullish. As you can see, it acted as support, resistance. Now it's acting as resistance again. I would say, most of these just need to take a little bit of a breather as it stands right now. If I were to draw a little trend line from this low to this low, it'd bring us up right around to this zone right here. So this area of confluence might be bouncing from this level from 15,575 to around 15,625. That would make the most sense. So that's all I got for you on today's market brief. I told you to be quick and to the point. Let me wrap up my thoughts really quick. Overall, the big thing that I'm watching is really just the VIX. If it comes to fill that lower gap tomorrow, as we've pointed out, if we get a gap up tomorrow, I'm probably looking to take some profits. I may look for some head short opportunities depending on what it looks like. But like I said, heading into a 3-day weekend, and if you want to have a good weekend, focus on good behaviors. You don't want to do anything crazy, going into the weekend, which, anything could happen on a 3-day weekend. Anything. So you don't want some big surprise coming out of it into Monday. That's all I got for you on today's episode, everybody. Have a wonderful night.